Today, I'm talking to DJ Kurtze of Five Star Bank. Five Star is a community bank in Sacramento, California that's making an audacious play to grow its commercial account footprint in San Francisco and the Bay Area. We cover the that the crisis in regional banking created for community FIs, and in particular for the personalized service they offer. We look at the uniqueness of the situation in San Francisco and the Bay Area and competing not just in the backyard, but the front yard of one of the country's biggest banks, Wells Fargo, and then the risk and reward math and what factors are most relevant for the near term future. We get to hear all of this as it's happening, what their playbook they're executing today for today's market. Enjoy this talk with DJ. With us today is DJ Kurtze. DJ is SVP and San Francisco Bay Area Regional President for Five Star Bank. DJ, thanks for being with us today.
Thanks for having me, Rich. Appreciate it.
So it's probably good just to talk a little bit about your background and your perspective and kind of why you're the guy doing this for Five Star Bank. So why don't you give us a little bit there?
Yeah, absolutely. I mean, I've been in banking really my whole career. Started at Wells Fargo and quickly got into small business banking and in the commercial banking space. It's been about 13 years at Wells Fargo, a large majority of that in the Bay Area. And, shortly after, made a move to a small business lender, an SBA lender for about a year, and then spent the last 4 years prior to joining Five Star Bank over at Signature Bank and helping to kind of grow out the Bay Area for Signature here in San Francisco.
And so your role now at Five Star is specifically around commercial accounts, small business in the Bay Area, correct?
Yeah, we're really an extension of the bank in Sacramento, and my role is to grow the Bay Area business. And we're really a private bank for small businesses and entrepreneurs. And so really any type of business and any business they need from a lending need or a treasury need, that's what we're doing. And so we're growing the office. Our first office is going to be opening in San Francisco, and I'm leading that charge. And we're also hiring many bankers, a lot of which came from First Republic, and a few of us from Signature, and a couple other acquired banks as well. We've got about 21 bankers now growing the San Francisco Bay Area region.
So the legacy on Five Star, they're based in Sacramento, correct?
Correct. Yeah. Great market share in Sacramento. The bank's been around 25 years. Went public in 2021. It really started by a group of entrepreneurs that wanted that high touch concierge type banking service for clients. And really, since 2021, we've really focused on some bigger growth plans. And with everything that happened last year in the market, it made a lot of sense for the bank to grow to the Bay Area. We want to be the premier business bank in Northern California, and the Bay Area is a huge piece of that, as well as the capital region.
Okay, so to say something happened last year is kind of an understatement, but you this is in response to what you see as a market opportunity, correct? I mean, obviously we had the collapse of SVB, the Silicon Valley Bank, which for many years was the de facto answer for startups and new companies, legendarily connected to, every VC firm on Sand Hill Road. And, they were kind of the de facto place. That rug got pulled out. And then we saw earlier or last year, kind of like the big scare around the other regionals, and in particular, JP Morgan Chase's acquisitions, right, around First Republic, and a few other smaller ones. So what's your take on that? Like, what do you see as what's missing, or what the real opportunity is with this upheaval, this disruption?
Yeah, great question. Yeah, well, first, I think the bank has seen the Bay Area as a huge opportunity for quite some time. So not just that what happened last year is the right opportunity, but I actually met James Beckwith, our CEO, 2 years prior to all of this happening, and he was trying to get in the Bay Area back then. I think the reality was it's been a very, and it still is a very, very competitive market, and tough to get into. And so with everything that happened last year, created a lot of opportunity just in that you've got not only really good talented bankers looking around for new opportunities, but also, business banking relationships are tough to move. They're challenging. And so when they're all of a sudden faced with banking with banks that acquired them and not necessarily the bank they chose to bank with, you've got a bigger opportunity, I think, to go after that market. So, yeah, Five Star really jumped on the opportunity last March and aggressively going after the market for that reason. Kind of going to your, what was your main question there was, you rounded out, got?
Really, like what do you see as the opportunity here? Like this whole idea about, kind of the risk or at least the perceived risk around regionals, some of the dissatisfaction with, hey, I had a relationship with a bank and they got acquired and now that relationship is different, maybe
Yeah,
better, maybe worse, but it's a lot of times different is bad. So that the timing on all this makes sense. And that's, a fairly common problem across the country.
mhm.
Why, I guess what I'm getting to is why now and what's unique about the opportunity about Five Star specifically going into the Bay Area? Because this is a one of one type market, right?
Absolutely. Well, I think both First Republic and the SVB were regional sized banks that I think had figured out how to still give a community bank type service model. So I think that's really unique. I think the unique piece of both of those banks being largely centered in the Bay Area makes it just a common thing in the market where you talk with business owners, you talk with just high net worth individuals that are looking. Everyone's kind of looking for who the next bank is, but I think it's a natural part of the conversation of who is going to step in and fill some of the void. And kind of what I was saying earlier, it's hard to move these banking relationships. It's an annoyance, and especially when it's a complex business relationship. And so these triggers are just, I think, opportunities for organic growth to take business from some of these bigger banks that have now acquired the opportunity. But like I said, it's more than just that. I mean, the Bay Area itself is a gigantic deposit opportunity, especially relative to other markets. And you don't have to capture a lot of the market. You don't have to be the number one player to make a really, really significant impact to a community bank like Five Star.
So one thing you said that's interesting and maybe contrary from what a lot of people experience is you're looking at, we're coming from a suburban or a rural area, if you want to describe Sacramento
Yeah.
that way, at least compared to the Bay Area, and going into a more urban environment as a deposit opportunity, right? Is that kind of what you see or what your targets are?
Um, yeah, I mean, I don't, I think Sacramento's a pretty big city in itself, and I don't know if it's, suburban to urban, but there is definitely some differences there. I think there's a lot of similarities too. I think Sacramento is really the backyard in the Bay Area. It's really close. A lot of Bay Area folks drive right through Sacramento and the great. So I think there's a lot of synergy um, to the two markets. But yeah, it's a huge deposit play. I think is one of the biggest reasons for the bank, and it's tough to grow deposits as any, especially over the last year, and we've been able to do that. And the Bay Area's been a part of that. So I think it's really all of those reasons.
So the reason I say it's contrary is a lot of time what we've seen from other smaller community banks is they will be in a market where they're dealing with an aging population, an aging deposit base. And what they're really lacking is close proximity or relationships for more lending opportunities with either younger depositors or younger customers or members for credit unions or businesses that are more on the borrow side. And
Hmm.
where they run into problems is starting to go further and further away for that lending opportunity where they have less of a connection, less of an understanding of the market. And empirically their risk goes up. Like their ability to loan, no matter what the package is, becomes, they're less competent at that the further away they are. So what you're doing, I guess what I'm saying is the play of, the smaller municipality to the larger one is not uncommon, but the going to the bigger one for deposit, like that's unusual. That's a different play than we typically see.
Yeah, I think it is definitely a different play, but I think it's opportunistic. And I think when the bank's really focused on these CNI business relationships, and I think that growing those organically, I think is the safest way to do that. And there's no doubt we're still going after lending in the Bay Area. We have to be able to lend, and that's largely how you gain a lot of the deposit relationships as well. But, I think the bank has a few other segments that do a really, really good job lending wise. And so to go after the deposit play, make a lot of sense. But it's not that, I just think the other piece of it is whether we've hired a really experienced team that understands the current market we're in. And a handful of our executives have not only from this market, but have worked in this market before as well. So it's not, I don't see it as such a big drastic shift, although it is definitely a more competitive market across the board. There's more big players, it's more competitive, but I think that's largely been open wide up than what happened in the last year, I think, in quite some way.
So let's talk about the market a little bit. Some of the unique things that you've seen, like how you describe it, or your ideal client, or things about that. Because again, San Francisco and the Bay Area, very different than almost anywhere else in the world. So what's your kind of view of it? Where do you see your play here, and what's the interesting opportunity there for you?
I think the interesting opportunity is there's so many different diverse businesses here, and so many different entrepreneurs and investors, and just I wouldn't say there's one specific segment that we're necessarily going after, but there's plenty of professional services, there's plenty of manufacturers, wholesalers, there's plenty of food service businesses, there's plenty of wine business. It's across the board. Technology and the venture space here, we do some in and do a good job when we do it and have the technology to serve them. So, it's really any of these businesses that want to be able to pick up the phone and call their banker and have a relationship with someone that can now with them and give them that high touch level of service, and that they're not necessarily getting at any of the bigger regionals or large banks. And it's becoming few and far between, I think, as the bigger banks just continue to get bigger. So I think it's up to us as community banks to really serve clients that way, where they're able to, get that level of service that they expect.
So is that mainly what you're positioning yourself on, is like, this is how you differentiate yourself, is, we are not that, or is there other elements to it?
I think that's definitely the number one element, but I think a lot of people say that and a lot of banks say that. And so you have to be able to execute it, and you have to be able to hire experienced people that know how to do it. And I think you have to be able to recruit, retain. But we've also really heavily invested in our technology platform. We do a fantastic job with being able to serve it any tech need or treasury need that a bigger business client would need. And then I think we're just, from a lending standpoint, our speed to serve and certainty of execution is really, really important. You have to be able to issue a term sheet on time and get a deal off the street to help a client close the deal when they need it, and they need to be able to trust that you can do that. And that takes time. It's not just gonna pick up and move overnight just because you say those things. And that's part of why we've really been specific with trying to hire bankers that have good sized portfolios, that have the experience and the reputation in the market. And I think that's probably the biggest key piece of that, is because you can't just come in from another market and pick up that business overnight unless you hire the right.
So it's a lot of relationship based banking, meaning
Absolutely.
This is not ad driven. There's not like a partner element to this. That's the crux of the whole thing. This is the person that the banker that that maybe you've had a relationship with before, that's coming to you with this other brand, this kind of fresh brand from Five Star.
Absolutely. Yeah. It's all related driven. Yeah. Everybody that banks with us knows exactly who their banker and their team is, and has their cell phone number and knows how to get a hold of them. And largely, I'd say probably 90% of the relationships we've opened in the Bay Area so far in the past year have been from existing relationships that our bankers have had.
So a big part of this is punching up. You're trying to go in and take share from, frankly, the biggest banks in the country. You've got Wells Fargo, which their headquarters is right there in San Francisco. What has been the response so far, or if there hasn't been, maybe what are you prepared for? What are you afraid of might happen from a response standpoint?
Yeah, the response has been overwhelmingly positive. I think that people and business owners and entrepreneurs in this market are hungry for a bank can give them the high level of service. I think, First Republic is a fantastic brand, and I think we can continue on the path that we're on and just continue to serve our clients well. We can gain that reputation as well, and we already have it with our customers in Sacramento. But it takes time. I mean, there's definitely concerns. I mean, with what happened last year, there's a lot more conversations around who are you as a bank, what's your size and how does that compare to others. But I think largely that a lot of that is subsided by the fact that they're working with people that they trust and bankers that they've worked with in the past, and know that they've done their homework, gone to a strong performing bank. So, but yeah, it takes time, and it doesn't happen overnight. It's been a year, and I think we've had a lot of success in that first year, but we're really going.
Now, how about on the competitive side? What have you seen from from the people you're taking share from, or if nothing, again, what maybe are you afraid of? What might happen, or what are your contingencies around that?
I mean, competitively, it is still very competitive, and I think especially on the deposit side, I think that's driven up, having to pay a higher rate than I think you typically like to. That definitely is a competitive factor in this market. A lot of banks are fighting for deposits, and I think there's no dumb money out there. Everybody knows that they can get some higher yields on rates and can diversify the yield on their money. So I think that's a big piece. I don't. There's not a whole lot. There's not a whole lot that I'm scared of, honestly. I think we're pretty well prepared, kind of roll with any punches. And I think with the amount of success that we've had already, that's just going to continue to get better. And if you look at the team of bankers that we've hired and the experience we've got an all-star group. So that largely takes the fear, I think, out. I think, I can't think of anything that's like a big major fear factor here. We're gonna be competitive. We're gonna win some. I think we're gonna win a lot. We're not gonna win everyone. We're not gonna be the lowest price for everybody. But I think people that see the value that we offer and the service that we provide are gonna want to do business with us.
Now, how much of your business now, or how much of what you're trying to get into is CRE related?
We do quite a bit of CRE lending, both owner, user, and investor. The bank itself really started as a CRE lender. A large part of what we're doing in the Bay Area is C&I focused, and so we're not doing quite as much CRE as maybe perhaps the rest of the bank is, but we do a great job in the CRE space, and I think we'll continue to do well there.
Now, what's your take on that? Because this is a kind of a contentious issue
Yeah.
about whether or not there's this ticking time bomb sitting on balance sheets, and on the other side, whether or not there's a huge opportunity in the market because there's kind of been this stalling around a lot of deals getting frustrated and being
Yeah.
held up by rates or other covenants, or kind of a general pulling back. What's your take on that? Or even if it's just limited to the local market?
Yeah, yeah. I mean, I think there's no doubt that there's some concern there, but I think it's a really nuanced conversation. I think there's a lot of headlines that are just CRE is the ticking time bomb, right? And you've seen them, and that's where we're talking about it. But I think when you actually dig into the CRE that's at risk, it's where some of the banks maybe got a little overextended, or really the bigger office deals that we've seen. I mean, that's been the highlight in our market, right? You see some really large office deals that are trading at a very, very much lower value than when they originally traded at it, years ago. So I think there's definitely a risk there, but I think it's going to be with some of the bigger regionals that actually did the office loans. Most community banks just didn't do those big loans. We didn't either. But I think it's also a little overblown with fear. I think we've been talking about this. And I think bankers largely are getting prepared, if not, very much have been working to be prepared for the issue over the last few years. So I think overall the industry's set in a better position to, I think, ride it out better than what are the headlines. And I'm probably on the more positive side of that camp. But, and then, the other thing that makes me kind of feel that way too is just conversations with investors and business owners that we have in the Bay Area. They're actually very excited for the opportunity to get in and find some deals in the market. So I think there's plenty of money sitting on the sidelines to take out some of these bigger deals down the road when there's opportunities. And so I think the combination there I don't think we're going to see anything as drastic. I think there'll definitely be bumps along the road, but probably not as drastic as what some of these headlines are making. And I think that, largely dependent on what rates do and where we go from there. But hopefully we get a little relief with some rates later in the year that I think will take some of that pain off.
So on that point, I'm going to ask you to maybe make a prediction or at least talk about what you're long and short on. Like, what do you see in the future that maybe you're really optimistic and looking forward to, or the scenario that maybe keeps you up at night?
I'm really optimistic on the Bay Area. I'm really optimistic on San Francisco. I know that's not like the headline that you typically see across the country, but when you talk with business owners and you actually are here in the market, you realize that there's a lot of positive things going on and a lot of things moving in the right direction and a lot of investments being made in technology and businesses here. And so I'm really positive on the Bay Area and San Francisco specifically in the long term. They've been able to ride out really every market. And then, where I'd be more cautious on, I guess, I think the market needs a rate decrease down the road, and I'm not sure we're going to get that. Maybe we get one. Maybe I don't have the crystal ball. I don't know what to forecast there, but getting a little bit. We see that held on or an increase even later next year or later this year even. I think could create some more challenges, but who knows what's going to happen there. Overall, their economy is still really strong, and I think there's some positive trends going on. So.
Well, DJ, thank you very much for sharing with us today. If anybody's interested in you or Five Star Bank, where can they go to get more information?
Just fivestarbank.com is perfect.
Great. We'll put the link in the show notes. DJ, thanks again for being with us.
Thanks for having me, Rich. Appreciate it.